Good morning, retail traders. It is 12/24, the day before Christmas, and I want to talk about two stocks or two indices that I think have hit a hard resistance, and we started seeing some consolidation last week. This is a sneaky snake trading strategy where we talk about chart patterns, moving averages, and being in the now. For right now, being in the now, we hit some 52-week high double tops, or not 52-week high, but all-time high double tops. And we've had an irrational, exuberant run in the past month and a half. So I'm going to take that in consideration that we need to consolidate. The definition of a double top. A double top is an extremely bearish technical reversal pattern that forms after an asset reaches a high price 2 consecutive times with a moderate decline between. And we're talking about moderate. We're not talking about moderate, we're talking about big decline in the two highs. So we pull up the SPY, for example. We had the all-time high here at 479.98. I'm using the body of the candles. This is on a weekly time frame. And we pulled back to the 200 SMA, and we called the bottom of this reversal pattern back up to a double top. And in between that, we hit what you call shoulder line, and I called this trade out also. This is a head and shoulders. And we hit that and bounced up a little bit above it and pulled back also. So keep in mind, every time you see a double top, you get a reversal. Not every time, but there's your double top right here. We had a pullback. Now we've got a double top right here. We could have a pullback to this previous high right here. And that'll be your solid support off the 9 EMA on the weekly time frame. So I'd use that 9 as a catalyst for support. It will come back and touch that 9 and bounce back up. It does it many a times. 9, 9, 9, 9, and then we broke support 9, 9, and then she broke out. And so now she's respecting that 9 again. So a pullback to the 9 on the weekly would be, I think, a solid entry level. But we just have to see what the market tells us. We trade with the market, not against it. Same as the SPX. It's at the double top. And I just want to point these hard resistance out because we've pointed it out before. We created a neckline here on a head and shoulders. It pulled back. We had an inverse head and shoulders breakout. Then we had the double top pullback. And now we've got another double top up here, and I think we could pull back to the previous high. So keep that in mind on the SPX. So I'm going to be very cautious. I'm going to let the market tell me what to do. So we're going to go into the 1 minute here. Let's go into the 5 minute, 5 day. Last week called out a put. I recognized that we were at that all-time high on the SPX, and I told the room, and I jumped in this put, and we had that big crash on the way down. I got out at the 200, made some real good money on this trade, but if I'd have held it, I'd have made a lot of good money. And we're having that same basic reaction each day. So now we've formed a flag. This is called a symmetrical flag. Some call it a wedge. I like to see a downward wedge. So we've got 1, 2, 3. This thing can easily pull back and hit that 200 on the 5 minute for support level, or it can go ahead and break out with the 1, 2, 3 and come back up here and double top again on last week's high. So I'm going to be very cautious into the market. I'm not going to get too crazy. I'm going to let the trades come to me. I do believe we are at a hard resistance and that we need to kind of cool off. Just look at the run that we've had. And, you know, runs like this kind of scare me a little bit. I'm going to call it a Santa Claus rally. We did call it out. We called it out, and she went ahead and she ran on up. And bounced off this here moving average. That's the 300 simple moving average. I've been using that 300 because we failed the 200, and I wanted to go to the next possible support, and that was the 300. And she landed right there. So let's see what happens. I want to see it hold the 9. If we do not hold the 9, we're going to have a pretty good little pullback. So it needs to hold the 9 EMA. And that's it, retail traders. I hope I gave you a little cautionary reason to maybe be a little cautious into the next month or so. Double top definition, again, is a bearish reversal pattern with 2 consecutive highs. This is the sneaky snake trading strategy where we talk about chart patterns, moving averages, and being in the now. Have a great day. Merry Christmas.